Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we had that payrolls report on Friday, fairly mixed, didn't really do a great deal for the expectations of March for a rate hike for the Fed, but it certainly looks like June is a possibility now. We've had, once again, the strong headline growth numbers. But the weak wage growth is still an issue, and that is why we saw a bit of a mixed reaction on Friday. Now, over the weekend, we had the Chinese growth targets for 2016 published. We had 6.5 to 7%, first time over a range. That's never been happened before. We had 7% last year for the target, 6.5 to 7 this year. It'd be interesting to see what happens there, but also they're looking to increase their budget deficit to try and sort of generate growth, I suppose. And also now we're going to get the markets looking forward to the ECB this week. This is a big meeting. We're going to get some sort of easing measures. Now the market, certainly looking at, say, markets such as the German 2-year Schatzyield, is projecting once more, similar to what we had in December, projecting some sort of a rate cut on the deposit rate, possibly as much as 20 basis points. Now, we had that disappointment in December. Once again, could we be seeing the same thing? The market is sort of looking towards possible further quantitative easing as well, and sort of including extra assets purchased in that in the basket that the government can do. So it'll be interesting to see how this pans out on Thursday. But that's certainly the key focus for markets this week. Now, in terms of forex markets, well, we've had sort of a bit of a dollar rally in recent weeks, slightly coming off the top on the back of that payrolls report on Friday. But again, we're still seeing the treasury yields pulling higher, and that would suggest that the dollar should be strengthening in due course. Now, obviously, we've got the Fed meeting coming up next week, so that will be again coming up on the horizon in terms of what we're looking out for. But certainly at the moment, euro dollar again sort of trading in that range between the 108 figure and 110.50. In terms of cable, we've had a bit of a rally on cable recently, haven't we? Looks like the Brexit fears just unwound a little bit, but again, I still think that it looks like this is just a rally into a selling opportunity on cable. And interestingly, that the dollar yen chart has sort of started to stabilize, going sideways around that 113.50 mark. Certainly looks as though that could be the case continuing there. Now, in terms of equity markets, we've had a rally, a strong rally, and technically speaking, these markets are much stronger than they were just a few weeks ago. And you've actually seen some breaking out levels, and I think this is certainly helped by these commodity prices pushing higher, and I'll talk about that in a second. But I think the equity markets, technically speaking, are looking a lot stronger. Now, can they hold on to these gains? We're starting to see them coming up against some key resistance levels, certainly on the DAX. Big fib level coming up as a resistance band, and also on the FTSE, a big momentum indicator, the RSI coming up to 60. That's a big indicator as well to watch out for. We've seen the S&P 500 up towards 2,000. Can it break through 2,000? That is pretty good pivot level on the S&P 500. Also, obviously, psychological as well. And across those commodity prices, what are we looking for? Well, we're seeing this gold price continuing to rally. I have to say that it surprised me that the strength of this rally has continued, but still coming up against dollar strength. How long can that last for? It'll be interesting to see. And I think it depends on what sort of easing measures possibly the ECB do on Thursday as to whether it gets another boost or not. And the oil price. This is obviously the big story. This is the commodity price that has driven the equity prices higher, and also risk appetite generally across the board. Now, the oil price has broken out and looking like it's based out, pushing above 34.80 on WTI, looking towards breaking up towards above $40 possibly on the Brent crude price. So some serious recovery there that we've got on the oil price. Again, can it be sustained? So throughout this week, what are we looking for? Well, we've got the Chinese trade data on Tuesday, and certainly then the markets will be focusing on whether it can sort of beat expectations, really. I think obviously the markets are forecasting, again, double-digit declines on both imports and exports, and it certainly is a driver of market sentiment on Tuesday. Then on Wednesday, we've got a couple of central banks. We've got the Bank of Canada and the RBNZ, neither of which are expected to cut rates at all. But then we look towards Thursday with this big ECB meeting at 12:45. We get the rates decision. Then at 1:30 on the afternoon, we got the press conference. That press conference is when you'll see possibly more easing measures in terms of quantitative easing. So lots going on this week, a lot of trade data, and also we've got that on Saturday, which is obviously after the markets close on Friday. On Saturday, we've got the Chinese industrial production data, which will really impact, I think, on Monday morning. So quite a lot going on this week, not necessarily stateside, but still ECB, big focus there. So I wish you good luck in your trading, and I'll speak to you next time. Thank you.